course, the broader peg of the conversation is going to be the earnings, but more importantly, we're also going to be focusing on the outlook. Mr. Kumar, hi morning, and thanks so much for your time. If I take a look at your quarter three numbers, the revenue EBITDA, they've taken a slight dip, but it's the reported profit that has taken a very big knock, coming in at around 39 crore rupees compared to 140 crores this time last year. Of course, you have one-offs in form of the labor code impact, but other than that, also talk to us about what has led to such a sharp pullback when it comes to your bottom line.
All right. Good morning, Snehi. Good morning, Shrishti. Thanks for having me over. So, in fact, as we come to the reported profit, before that, it's important to give you a sense of the performance of the quarter. And during the quarter, we in fact had a total sales volume of close to 151,000 tons, which was slightly coming off from the corresponding quarter of the last year. But at the same time, for the 9 months at 483,000, we were largely on course, or in comparison to last 9 months comparative period, we were at the same level. Now, during the period, we had an EBITDA margin expansion of 200 basis points. So for the quarter or the previous quarter, quarter two, we had an EBITDA improvement. And at the same time, coming back to the reported profit after tax, we had the impact, as you rightly pointed out, of the one-time provision due to the labor laws consolidation into one, which was close to about 125 million rupees. And at the same time, in the quarter three of last year, we had an exchange gain of 200 million, which was not there. So when you compare the two, largely if you account for that, it's a performance which is lower, but not so significantly as compared to the quarter three of the last year.
All right, good to know that. Mr. Kumar, hi morning. This is Shrishti also joining in. So it did help us understand the factors behind the quarter three performance, but believe that the full year guidance for your EBITDA stood at 1,800 to 1,850 crores. That we know the latest figure, with almost 1,200 crores of EBITDA that has been achieved in the first 9 months of this fiscal year. Are you confident of getting that 600 crores of EBITDA just in quarter four? And the other part is with respect to the higher input cost prices. Do you believe that the company will be able to manage this sort of a pressure that we have seen already in your financial performance?
So two things important here to note is that number one, we see that margins holding firm for the year, for the 9 months year to date, we have margins of close to 11.4%. And this is despite subdued quarter three. So quarter three performance to us is something that while the numbers are what they are, but at the same time, we have taken a lot of positives from the quarter. And we are confident that if we are holding at 11.4% margin for the 9 months year to date, and with the quarter four looking much better, we definitely expect the margins to improve and be in the range of 11.5% or thereabout or slightly up. And at the same time, the outlook that we see is that during the quarter, we have witnessed with this easing of the tariff-related uncertainties and import price pressure, which was reflecting on the volumes, both sales here and overseas in many non-US markets. That kind of stabilizing now will hold us good even for the packaging films. So moving forward, we see a stabilization of the packaging films, as well as the major growth drivers we can see is that aseptic business will contribute, and quarter four and quarter one typically are the strongest month for the aseptic liquid packaging. And as we enter quarter four now, and as we are now getting into the next fiscal, we expect the same to gain momentum, which should hold good for our overall performance. And also during the quarter, one more thing which was noteworthy was that our flexible packaging business did much better. And that, in fact, is expected to further gain momentum with the kind of US trade deals and also the tariff normalization. And we expect as a combination of all that the three segments of packaging films, the value-added products, including flexible packaging and aseptic, should overall result into a much better performance for quarter four and likely to continue in the fiscal 27. I would also like to add here that now, in fact, the contribution from our overseas business and more importantly, the high margin business is increasing. And with the commissioning operation phase of our aseptic liquid packaging facility in Egypt, which is the same size as India, as well as our WPP facility in Mexico, as
Right.
those two get into the operational phase, we expect the contribution from overseas revenues, which are typically expected to be a higher margin business,
Okay.
to significantly further shore up our margins.
Okay, so that sounds really optimistic going ahead. And in fact, that's what I was going to ask you about your international operations. But thanks for answering that for us. On that note, Mr. Kumar, due to paucity of time, I'm going to have to let you go today. Thanks once again for joining us.
Thank you so much, Shashri. Thanks,
Okay,
Meg.
viewers, on that note, time to slip into a very short break. Be right back. And on the other side, we are going to be interacting with the management of Indigo Paints. So stay tuned and we'll be right back.